Good morning, traders, and welcome to the live stream. My name is Charles Goff. This is Pirate Traders, a community that is focused on the ES and the NQ and how we read them as an auction process. I'm starting today zoomed out and looking at the daily chart, and I'm doing this on purpose. The reason that I'm starting with the daily chart is, sometimes when the market gets kind of messy and gets kind of emotional and erratic in the way that it's moving, sometimes we can kind of get lost in all of the chaos. And so it really helps to zoom back out and take a look at the daily to give us some context to understand what might be happening intraday. And when I look at this on a daily context, what do I see? I see momentum to the upside that was running out of steam. We got a liquidation. Now that liquidation is retracing. Okay, that's it. It's a simple concept. You have momentum, you run out of momentum, you run out of people willing to go long, you liquidate the market, squeezing everyone that's trying to get long up there. That gives stronger hand buyers a chance to step in. What happens next? When you get a liquidation break and those strong hand buyers step in, you retrace the liquidation. That's just what you do. So looking at this on a daily time frame, this tells me the market wants to head back up towards those all-time highs. Now, that doesn't mean I'm going long right at the opening bell today. We need a lot more context for intraday trades, but it's bullish. When you clear away all the chaos and you just look at it very simplistically, we had a liquidation and we're retracing. That's all it is. So let's zoom in a little bit and we'll try to get some context for how we could take day trades today. So I'm looking at the market profile chart over here on the left side of the screen. This is how I look at price action. By looking at the market profile, I see the market in three dimensions. I see not just, where did the market go on a given day or over a given period of time, but each individual price level, what happens at those levels. So right now, we have what we call a gap up. The gap is between today's opening price and yesterday's high of the day. Okay, that is the gap. So the first order of business for the market, whenever there is a gap, is to try to fill the gap. I do believe there's a very high probability we will fill the gap today. Okay, let's say it doesn't. Let's say right now we push back through the opening price and we work our way to the overnight high. Well, that is what we call a gap and go, when the market doesn't need to fill the gap. That's the most bullish scenario you could get. So if we were to immediately move to the overnight high, around 67.42 right now, that would be bullish as a gap and go. But even if we came back down to yesterday's high and filled the gap, it's not bearish, because that's just the market filling the gap. It's just cleaning up an unfinished auction. What happens around yesterday's high, that becomes very important, because if you fill the gap and you find support, that too is bullish, that the market wants to go higher. Okay. It is only if you fill the gap and then start to spend time and bring in volume inside yesterday's range, you don't get the bounce, that you then become bearish, that the market might need to pull back. I mentioned in my email to brigade members this morning to be cautious getting bearish if we do fill the gap and spend some time, because there is a lot of support right below the high. There is support basically between 67.10 and 67.15. There's a lot of support in here. So the market could come back in, start spending time looking like it's getting bearish, and then it catches that bid and it immediately turns around and heads higher. So be a little cautious there. But if the market gets below 67.09, it is definitely going for a larger pullback. Okay, so we'll be bearish if that happens. But pretty much until that happens, I'm bullish for that larger move on a swing trade back up towards the all-time high to begin today. Okay, so right now we're asking ourselves the question, is the market going to fill the gap? And if it does it find support? I am currently in 4-tick increments because that's where I was yesterday. I'm going to go back to 2. And I will adjust and go back to 4 if we start to get a very volatile day. But for now, I think I want to be in 2-tick increments. Waiting to see if the gap fills. Let me know in the survey where you think the market is going today, up, down, or sideways. I know I just told you I'm bullish, so I assume that's going to cause some of you to have a bias, but I'm really curious what your thoughts are. Don't be afraid to vote. It's completely anonymous. Nobody will know what you pick, but the more votes we get, the more data we have to carry forward. So do you think the market is going up, down, or sideways today from the opening price, from 67.32? Speak now or forever hold your peace. All right, the results are in. 59% of you think the market is going up today. 27% of you think the market is going down or going sideways today, and 14% of you think the market is going down. So everyone should short the market right now. No, I'm just kidding. I agree with the majority on this one. I think the market is going higher today. Okay, so right now we have a gap and go. That increases the odds we're heading to the overnight high, 67.41. I don't think it's going to keep going from there just because the ticks are so overbought. So I do still think they want to come back for that gap fill. I would not be chasing longs up here at the high. And of course, when we get to the overnight high, we will watch for a look above and fail at that overnight high. Good morning to DNK, Rich, Jason. He says, smash the like button for the captain. Hear, hear. I concur. Smash the like and subscribe. Smash the like. Remember that by pushing that thumbs up button, you tell the YouTube algorithm that you're enjoying the show and that they might maybe send some more people here to check it out. And that helps us grow this community, which just helps us have more information to share. Arjit in the house, good morning to you. Will is here, and Willie T. Ahoy to the two of you. Derek is here. He says, down first to the previous day's close, then up to the all-time high. I would have to disagree with you there. So like I said, this gap is all about yesterday's high. If we can find support here, that's when we turn around and we start that move to the upside. But if we don't find support here, for example, if we had to go all the way back down to yesterday's closing price, we're not coming back up. We're going to stay down there. That would mean that we're in balance. So let me just walk you through some of the different, market profile ways of thinking about balance and momentum. So there's a lot of reasons to think balance. We had an inside day 2 days ago that was inside the previous day's range. We had an engulfing day yesterday that engulfed the day before, but was inside the previous day's range, inside the previous day's value area. So that's all balance. That's all a reason to think the market just wants to go sideways in here for a while, right? We also left behind some weak references. We left behind some single prints. So there's a magnet there, and we left behind a weak low. So there's a magnet there. So all of those are reasons to think the market needs to come back in. And if it does, it's just still bouncing. It's just still spending time in this area, right? But we also have a lot of reasons to see the market as bullish. We were able to move the fairest price to do business higher yesterday, both in terms of time and volume. We were able to pull the value area up against the upper end of the range. It was a P-shaped profile for the day, which is a sign of momentum up. So all of these are reasons to think we have momentum. And then we opened this morning with a gap up. So to me, there's really only one of two things that happens today. Either we continue the momentum to the upside, or we come back into the range and then go sideways. I do not see any reason on earth for the market to come back in, then turn around and go back up today. Okay. Now I could be wrong. I've been wrong before. But I just don't see that. It is either going to be we have momentum and we keep going, which would be finding support in the upper end of yesterday's range, or we don't, in which case we balance. Okay, so I'm going to go ahead and put up the feeling bearish banner, as I do believe we are heading for that overnight high. As I said, the higher probability up here around 67.41 is actually that we'll fail and come back down and fill the gap. The ticks are still overbought, and we still have that unfilled gap. So if we can get up here to the overnight high and stay up here and go sideways long enough that the ticks are able to cool off and come to the zero line, then we can trust that the momentum is going to continue. But for now, it is just to get there, and we'll have to wait and see what happens next. So you say to me, Charles, why don't you think the market's going straight to the moon? Why don't you think we're just going to keep going up once we get to the overnight high? Because when the ticks open and they're above positive 1,000, that means the market is overbought on a very, very short-term time frame, right? Just over the next, 20 minutes, it's overbought. And it basically just means that it's very easy to squeeze longs because a massive majority of the trades are long. And so what you really want to do is you want to give those longs a reason to get out of their trade. Now, there's two ways you could do that. Like I said, you could just go sideways at the overnight high. And you spend enough time going sideways, those longs start to get bored, they start to get frustrated, and they go ahead and they take profits. And then the ticks get back down to the zero line. Or the other thing is you dip back down, fill the gap, and then you stop out those longs, right? And then that's a reason for the market to get back to the zero line. It is really only once we get back to the zero line that you know for sure you're bringing in new buyers today, as opposed to squeezing sellers from yesterday and just, FOMO buying basically. So to know we have good, strong buyers, we got to get those ticks back to the zero line. And we either do it by going sideways at the overnight high, or we do it by filling the gap. Right now, it looks like they want to do it by going sideways at the overnight high. Let's see what happens. So there it is. There's your test of the overnight high. This is where some of those longs are going to start taking profits. Okay? So we're watching for a change in the auction here. Does the market start to run out of steam? Is there less and less volume? Does the volume taper off up here? Does price stay up here? Or does it pull back down through the open again? If price can stay and we can bring in volume, we can continue higher. If not, we look for that gap fill. Good morning to Percy. Massive. DNK says the Q got a gap fill. Let's take a quick look. See what's happening with the Q. Ooh, yes, and you have a weak high. So this is that moment of truth for the NQ. They pretty much right now, they want to turn this into support and turn around and head back up through the opening price. This is the moment where the market is asking, is this a gap and go, where we go higher? Or is this a gap and crap, where we do not find support and then we have to start to back test, pull back into yesterday's range? So a moment of truth for the buyers on the NQ. Can they bounce from here and get back up through the opening price, which would be bullish, just a gap and go, to the moon? Or do we start to pull back into yesterday's range, which is neutral, less bullish? Let's see what happens. Okay, so obviously on the ES, while we were talking, we got to look above and fail of the overnight high. So that tells us the market isn't going to get those ticks back to zero by staying up here. It's going to fill the gap. So we are now watching for a bounce around 67.23. And by then, the ticks should be back at the zero line, so we'll watch for a bounce on the ticks as well. Remember, I remain bullish here. This is not bearish. Filling the gap is just cleaning up an unfinished auction. As of this moment, the higher probability is that buyers will step in and start buying once we start to push into yesterday's range. So there you go. Ticks are back at the zero line. Lucas says the levels of interest in the email are 100 points below the actual ones. I'm not sure what that means. Can somebody else verify what he's talking about? You may have opened an email from yesterday or something. Billy K in the house. Good morning to you. Design Knob is here. Welcome. We got deer. They got little T-Rex hands. They got machine guns on their head. Design Knob in the house. Sook is here. Okay, so far we are getting buyers. We're getting that little bounce on the ticks. Still need to fill the gap, but that is a bullish first sign. Abu says the NQ is heading lower. I wouldn't overly panic here. I really think it's just the ES needs to fill the gap. So I have a feeling the NQ will turn around just as soon as the ES does. We got FOMO. They're chasing price. These short-term traders are fixing to get themselves squeezed. Couldn't even wait for a gap fill. Let's take a quick look at spot gamma to get some ideas about what's happening with some various gamma levels on the chart. Okay, so overall gamma is a little bit blue right now. So that implies more sort of pinning, more sort of sideways types of moves than necessary, or I shouldn't say sideways, more like smaller types of moves than larger elongated types of moves. It looks like if we were to sell off, basically 40 points lower, we could start to get real exaggeration to the downside as we'd be entering negative gamma down there. But for now, we're looking for, smaller, tighter ranges. Let's look at the delta pressure, get an idea what's going on there. Okay, support below, resistance above. So the support is literally, right where the gap fill was. That's where the support, starts. The heavy purple color is right there. And the red, again, is probably roughly 10, 15 points above us. So, we're going to start to get some resistance as we work our way higher. When we look at the individual strike prices and we start to say, what strike price could be a magnet? We've got this one here, could be a magnet, and we've got this one here that could be a magnet for price. So we're keeping an eye on that and how does it change throughout the day. Right now, that's, the options market is telling us that they may want to go as high as 67.30 on the SPX, which again is roughly 30 points higher than we currently are. Okay, so that's a move to the upside. That can change, right? As as people take profits on trades and they enter new trades, those gamma levels change based on what strike prices they're using. But right now on the 0-day options, that is sort of the target to the upside, a 30-point move up. And same thing on the longer dated options. So all of that is reading bullish to me. I do not like this unfilled gap. I do not like it, as the market could crap. So, if I was going to go long here at the highs, I would need to see a lot of support up here to get long. Otherwise, I'd rather wait for it to fill the gap. This is just that gap and chop where they take the market up, squeeze sellers, take the market down, squeeze buyers, vice versa. So now we are watching the ticks to see if we get new buying up here. A little short covering. Create a low volume node. Making note of that. More short covering. Everybody that was just selling, looking for that gap fill, they didn't get to their target. So they never got to take profits. So now they're like, damn it. And they're getting squeezed. We still need to see new buying up here to think it's going to keep going. Remember, squeezing sellers is not new buying. That's old business. We want to see new business. Okay, more short covering. Took out another set of stops. Bet you we can see it on Bookmap. There it is. Somebody just got taken out for 280 contracts. Sorry, bro. Oh, somebody else for 180. Sucks to be you. Okay. So earlier on in the day, I said I was bullish as long as we stayed above, those levels inside yesterday's range. Because we've gotten this first move, and because this move is driven mostly by shorts covering, I would now say I am only bullish if we stay above the opening price. Okay? We're now bringing in enough new longs up here that if we come through the opening price, we're going to crash and burn the next time. So I am now bullish as long as we stay above 67.32. I'll be looking for support around 67.40, which is this node of volume right here, which is just right at the overnight high. That's a reason for support. I'll also be watching this node right here, and then finally just above the opening price. If any one of those levels holds as support, this market keeps going higher today. Okay? If we come through that opening price, we're going down. This is a gap and go. This is bullish. So right now we are under the assumption that this support will hold and that the market will continue to the upside, maybe for hours. Okay, we just created a poor high. That is bullish to see. And repaired it instantly. Still just squeezing those sellers. Lots of people giving up on their shorts. So you say to me, Charles, oh my God, it's going up so fast. Don't I need to go long right now at the high? Don't I have to go long or I'm going to miss it? No, you are not going to miss the move today if you're not long yet. Why? This is mostly short covering. So unless we can bring in a lot of FOMO buying up here, we're going to need to come back down purely because it's short covering that's getting us up here. Okay, whenever we've taken out the last set of stops there is to take out, down will come. The other reason is we have this low volume node right here. Anytime I see less than 200 contracts have traded at any particular level inside the range, I make note of it because there's a very high probability, 95% probability that at some point today, the market's going to come back to this level. And so if I'm like, oh my God, I wish I was long, but I'm not, that's fine. Wait at the very least to come back to that low volume node to get long, or for the test of the overnight high to get long. Don't need to FOMO in at the high. Not when I see that it's short covering that got us here. Not when Bookmap is telling me what's going on. No reason to FOMO, Croco says, could you mark the gap, please? Yeah, so the software automatically marks the gap. It's this little green arrow right here. So as long as we still have that little green arrow, we still have a little bit of gap. The gap is yesterday's high. That's the gap fill. But now the gap is not of interest to us anymore. It was first thing in the morning, but now that we got above the overnight high and we got new buying, which is the ticks bouncing, right? If you look, ticks positive, bringing in volume, that's new buying. And we got short covering, right? That's, momentum in a different form. We're not worried about the gap fill anymore. Now we are worried about, can we keep this momentum going, right? Is it just shorts covering? Is that all we've got up here? Or is the market really going long right now? Are people buying stocks? So we don't have to worry about the gap. If they're going to go long today, they're going to do it above the opening price. So now the gap doesn't matter. We're focused on staying above the opening price. If we cross through the opening price, meaning we're not getting new buying up here, well then, yeah, the gap comes back into play. But we always have to take the market one step at a time. What information is important right now? When it stops mattering, what is the next important piece of information? Right now, the information from the market is we're bullish. The market wants to go up, but it needs a dip. It needs to come back to 44. So we're not chasing price. We're waiting for a dip, but we're feeling bullish, which means we're looking for longs. But Charles, I can't stand it. I got to get long. Well, that's fine. Get long right now. But just know you have to take on a lot of risk. You got to take on 20 points of risk to be long right now, because the market could come all the way down to just above the opening price and still turn around and keep going higher today. Would you want to be long here if the market came all the way back down here first and then went up? Well, that's for you to decide. Ticks are saying more new buying. Tempo is saying it's more stops getting taken out. A lot of people got bearish over the last few days, and a lot of them are having to change their mind. Okay, so NQ Let me just move it over to the side a little bit here. Okay. So NQ is now a gap and go. It's a gap fill and go. They poked back into yesterday's range. This is yesterday's range. Okay. What happened once they poked into yesterday's range? The volume tapered off. Less and less and less volume on the way down. That's showing us the end of the auction to the downside. At that moment, you had a weak high because the high of the day was the opening price. What did the market do? Tapered off, reversed back up, crossed through that opening price, repairing that weakness. Then it got above the overnight high. So now what does the market for the NQ have to do to keep this momentum going? They got to turn the overnight high into support. They got to come back down and they got to find buyers around 25.025. If they can hold that level, the momentum continues. It's a bull market, you know. Malcolm says, don't be a FOMO bozo. Oh, I'm stealing that. Oh, one more thing I wanted to mention today as we watch more short covering. Boo-boo! Oh my God, Charles, I'm so upset. Don't you worry. That low volume node, it's still there. The other thing I wanted to mention today is that I'm going to be doing another interview with Brent Kachuba from Spot Gamma next week. I'm not going to do it live like we did last time. The reason being that we had audio problems the last time, and it was a huge distraction to me, seeing that people were complaining about the audio while I was trying to conduct an interview and ask important questions. So this time around, I'm just going to pre-record it and post it. So that'll be coming out next week. But because you guys can't be there live, I would love to know what questions you would like me to ask Brent. So again, these are going to be questions related to Spot Gamma, how you use it, what are the features and how to use them. This is going to be about the concept of trading gamma levels and understanding market maker behaviors. So I put a link in the email this morning. I also just put it in the chat there. If you want to click on that, it'll take you to a little survey here. And if you just want to let me know, just type out, your questions that you want me to ask. This is totally anonymous. I'm not collecting email addresses or anything like that. I'm just curious, what do you want me to ask Brent in that interview? What do you want to learn about Spot Gamma or just trading gamma levels in general? So that, I can have a great interview and we can get a lot of good insights from the man himself. Speaking of gamma levels, earlier we were talking about this level right here. This is the largest level for gamma right now on the 0 DTE. So this is a magnet for price to get to it. We've got roughly another 10 points, it looks like. Yes, another 10 points to the upside. Once we get there, traders who bought options at this strike price, they will then be in the money, okay? Or at the money. Once those options are at the money, those people will start to take profits on them. As those traders start to take profits, the market makers that sold them those options are buying them back, which will reduce the gamma at that level. Okay. So the next question we will have once the gamma at this particular strike price starts to dissipate is, where does it go next? Is it at a higher strike price or is it at a lower strike price? And that'll give us an idea of whether the momentum can keep going or it's going to need to reverse and come back down. You get stopped out, and you get stopped out, and you get stopped out. Oh, they're getting squeezed. Look at this. Look at this straight line up. I know you guys are feeling FOMO. But please learn from this chart. It's just stops getting taken out the whole way. They are just hunting For sellers, they can squeeze. And the fact that we just squeezed a few more at the high means we're going to get another poke. I'm now looking for resistance around 67.69. Bow, chicka, wow, wow. Looking for sellers at 69. Okay, somebody piling on some liquidity up here around 67.80. Looks like they are trying to scare price away. Peter says, whoever says this is short covering does not know what they says. Sounds like you don't know how to says things. Better to shite down and go away? How about this, Peter? How about a personal bet between you and I? I would be willing to bet that we are going to come back to 67.44. I'd be willing to bet it because this is mostly short covering. And when that short covering runs out, the market's got to come back down. What are you willing to bet me if you think I'm wrong? You can shite it right there in the chat. Let me know. Hello? Peter, are you there? Fair enough. He says he's taking profits from the market. Good call. It's a great place to take profits. Mercutio says, could you go short just for the move down? No, you cannot, because you can't predict when it's going to start. That's the thing about FOMO, right? You know, there's the way the market is moving higher right now is that it pokes up and then that causes shorts to cover. Boop, boop, boop. And then people are chasing. They're like, oh man, you know, I got to get long here. I'm missing the move. I got to get long. So then you get some FOMO buying. And then that breaks through a level, which causes more stops to get taken out. Boop, boop, boop. And you go up. And then you get more FOMO buying. Or people are like, oh man, I got to get long the market. And so they chase it. And so it goes up a little bit more. And then it takes out more stops. And then boop, boop, boop. You move a little bit higher. And then you get more FOMO. And the thing about it is, this combination of short covering plus FOMO buying, it will shock you how far they can push it. Like, that is literally the expression that Jim Dalton uses. Like, it will shock you. They can just keep going and going and going. So the worst thing you can do is try to short against it, because then all it takes is a few more FOMO buyers. And what do? They take out your stop, right? And they keep going. And that's why we get these crazy rallies on purely short covering and FOMO buying, because people keep trying to short it and then they keep getting squeezed. And then that brings in more FOMO buyers, which squeezes the next set of shorts, and so on and so forth, right? So the better way to play momentum is to just get long as soon as you can, right? Just get long. It's momentum, just get long. And then whenever it seems like this short covering and FOMO buying is running out, which is right now, by the way, whenever it seems like it's running out, that's when you take profits on your long. You lock in those gains. Then you wait for the dip and you buy the dip for the next big move, which is where the stronger hand buyers will step in and take the market up. You don't fight the momentum, you use it. Well, let's say in the case of today, you just never got long this morning. You just didn't trust it. You never got long. You don't chase the price either. You have to just be patient and wait for the dip. So essentially, to try to explain this more simplistically, I think the market is going to come back to 44. I think it's going to find support in here, and then it's going to turn around and come right back up to the high. Not necessarily immediately, but over the next few hours, right? It'll come back up to that high. It would be better to be buying that dip and then make your money off of the move once, you know, you've squeezed all the sellers and you've, you know, taken out all the FOMO buyers and you're now bringing in strong hands, than it would be to try to catch the move somewhere along the way in the first move, or to try to short it for the move back. What you will find, the more you study the auction process, is that the edge is in going with the flow. And when that flow is momentum, you know, short covering plus FOMO buying, the trick to that is you got to get in the trade as quickly as possible. And if you don't, you can't chase it and you can't fight it. If you miss that entry right away, which would have been either, you know, the market tried to fill the gap, couldn't, you would have either been getting long as you came back through the opening price, or when it got above the overnight high and it was bringing in new buyers, you could have got long there. If you didn't get in early, you have no choice but to wait and be patient. And if you do that every day, you either get in the trade quickly when it's momentum, or you wait for the pullback, then you will have a much higher win rate over a series of days. You know, if you're talking about you're going to trade the same way every day over and over, 6 months from now, you will be better off not chasing and not fighting. But it will require a lot of patience. It will require a lot of discipline. And there goes Peter. Bye-bye, guys. The trolls, man. They always get bored. They always give up sooner or later. But it's good to know he was right about the low. He was right about the high. He made every single trade, and he's never wrong. We're so happy you graced us with your presence. Peter, have a great day. Okay, so right now I'm watching these ticks. And this is where it gets important, what happens next. So we got all this short covering and FOMO buying that got us up here to higher prices, but now we're beginning to bring in volume up here. So we want to know, is this buyers up here? Because if it is, we're going to make another move to the upside. Or is it sellers getting in which case that means the market is ready for its pullback. And so the ticks will tell us which of the two we're getting right now. If the ticks continue to push lower, it's sellers getting short here. Okay? If the ticks bounce right now and start to go up, it's buyers. In which case, we don't worry about this anymore. We look for the next move to the upside. We got to take the information one step at a time. This is that next step. Can the buyers stay up here, or do we get the dip? The ticks will tell the tale. Gunjana says, do you sometimes trade options to cover futures? The other way around. So I'll take a trade in the options market for a swing trade. And then if it's not working, I'll hedge it with futures. So let's say this morning I woke up and I was bullish and I was thinking, over the next 3 or 4 days, we're probably heading to all-time highs. What am I going to do? I'm going to, pick a strike price, probably about halfway between wherever the market currently is and the all-time high. So, this is this morning, the market's down here. I'm going to say, here's the all-time high where I think the market is going. Let me buy a call option with a strike price halfway between there. And if I think it's going to be over 3 or 4 days, I'll give it a few days of breathing room. So I'll say, let me buy it, an option that expires 5 days from now or 6 days from now. Okay. And that'll be a call or, a call spread if I want less risk. And then I'm in my trade, right? But let's say then the market opens today and it fills the gap. And all of a sudden we get down inside yesterday's range and we're getting new selling. Well, now I'm like, well, shit. So I want to cover the cost of that option that I bought. I will short the futures for the move lower until I've made as much money from the futures trade as it cost me to buy that option or that spread. And then once I've locked in those profits, I can just hold on to that option for the next 6 days and just see what happens. And hopefully at some point in the next 6 days, we get above my strike price. But at that point, there's no risk to me because I've covered the cost of the option with the future intraday as a hedge. So that's sort of next level trading. I don't recommend that people that are new to trading think that way because it requires you to be able to go long and short the same market at the same time. And it took me years to be able to develop that skill set. So I tell people, keep it simple. You can trade with options or you can trade with futures, but stick with one or the other until you get really good. Then you can start to make your strategies a little more complex. But it's always better to start simple. Mackie Mac says, did you have Peter liquidated for being insolvent? Yes, I muted him for 24 hours. One thing that I hate about live streaming to the public, the reason why I prefer to do the private streams with brigade members only, is that there's always people that show up and either just talk shit for the sake of talking shit, just to get me riled up because they find it entertaining. These people are called trolls. And there's a lot of people that just make ridiculous claims. Like they come in and they're like, I just bought the low of the day and I sold the high of the day and I'm so smart and look at me. And they're just trying to get people to, click on their thing and find them on YouTube and follow them. And they're just trying to basically get their name out there using my stream as a way to do it. And I long ago learned I'll play with them for a little bit. I'll give them a little bit of breathing room to have some fun. But as soon as it starts to become a distraction to me, I just mute them for 24 hours. So he can come back next time, but he's liquidated for today. Okay, so we got this volume coming in. We know that people are doing business up here. And we look at the ticks and we say, what are they doing? They're selling. So that tells us the market needs the pullback. As I said, this is a magnet right here at 44. Okay, it's a low volume node. That doesn't guarantee in this pullback right now we're going to get there, but that is a very high probability. I will also be looking for support right here around the A period high. It's a large cumulative node. So it might be that if the buyers front run it today, they may start buying there at the A period high. But if not, it'll be 44. Mr. Ree in the house, good morning to you. Bogdan says there are others that are learning too. Well, that's what we're here for. We're hoping you learned something. River Rock says that's good liquidation. We haven't gotten it yet, but we are set up for it. For a liquidation right into the base of the B period single prints. Just imagine anyone that's going long right now. You see all these levels. They're buying, they're buying, they're buying. What's going to happen to those buyers if we poke through? There you go. The first 102 of them just got taken out. It's liquidation time. DNK says, are we above the spot gamma level now? And Malcolm says, no, it was SPX 6730. Yeah, no, it's still there. That magnet is still there. And I still think that's where we're going today. I just think we need a dip first. Then we'll turn around and head back up for it. So it's still another, another roughly 10 points from the high today. And it's still there. Still 98 percentile, 99 percentile. But the problem is, oh, here we go. So this node is starting to disappear. Something should happen here. The problem is that we haven't had that good dip to bring in the buyers to get there yet. But it's coming. It be coming. Guanja says, when there's a liquidation, does Bookmap help you to see new money selling and passive buyers who could absorb it? I guess technically, if you wanted to really zoom in, and kind of like, look at a very exact way at levels and how the orders enter and then how they get filled in that moment while it's liquidating. Yeah, you can watch it. I mean, you can literally watch it happen. I don't use Bookmap in that particular way. That's more what I would use the ticks for. So let's say the market started to sell off here. Boop, 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 boop. And then price were to bounce. Then I'd look at the ticks. And that would tell me, is it buyers or sellers? You know what I mean? And if the ticks are going down, and then at the time that price bounces, the ticks also bounce, well, then I'd know it's buyers. That's support. We're going higher from there. So yeah, I use the ticks. What I use Bookmap for is recognizing when it stops being taken out versus new buyers, right? Or sellers, because that's a very important thing to understand. Old business, meaning people that are already in trades, can be forced out of their trades. New business can give you an idea of where the market is going next. The exchange between old business to new business is the best edge you have. So we know it's FOMO happening up here. If we squeeze that FOMO, taking out that old business, those FOMO longs, and then they buy the dip and we see support and strong hands buying, well, then we know the next auction is to the upside and we can trust it. Whereas up here, we're kind of just guessing. The other side of this coin is there's two ways to balance off excess momentum. So let's say like from the opening price today to the current high, that's momentum, that move. It was just like boom, 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 boom. Look at it right there. Boom, 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 straight up. That's momentum. There's two ways that you can balance off momentum. One is with price. So you literally just dip. You push up, boom, 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 boom. You come back down. You find buyers and then you keep going, or not, and then you go lower, right? That's balancing with price. The other way you can balance is with time, right? You can push up and then just stay up there, and you just stay long enough that you change people's minds and they start to get long, and then you get the buyers and you continue higher. Both of those are possible. So by paying attention to how we got up there, was it short covering or was it, new buying, helps you to decide, is it probably going to balance with price or with time? All of these things, you got to combine them together. And I know if you're new, it sounds like a lot to think about, but once you've watched the market move like this day in and day out for months, your brain just automatically figures this stuff out. It just kind of knows, okay, this feels more like short covering. Okay, this feels more like good solid buying. Okay, this feels like the market is balancing with time, not price. Okay, it feels like it's balancing with price, not time. And then you just get a little better at it every day. Streets also says, closing time, time to liquidate the buyers and give the market a little dip. Wow, wow. Closing time. Liquidate the FOMO. Perhaps they'll learn not to chase the trade. Probably not. Probably they won't learn because they never do. Because chasing the long at the high is about emotion. It's not about technical analysis. The technical analysis told us the market was getting overbought up there, but emotion. People are mad they're not in the long and they're desperate to get in the long, and so they get in at a bad location. Then the market dips and they get squeezed. And as they are getting squeezed, the strong hands, the people who waited for the dip, they get long. It's emotion, all emotion. Emotion makes traders screw themselves over and over and over and over again. Manuel says, I love your read with Market Profile. I use ATAS, but I'll sign up for your Discord trading room and the daily updates. We'd love to have you. And the one thing I always want to emphasize to people is I do not preach that you need to use what I use. I'm not saying you have to look at Market Profile or you have to look at gamma levels or you have to look at market internals or Bookmap, order flow, any of that stuff. I'm not pushing that narrative. These are just what I use. The narrative that I push is the understanding of the auction process, right? The understanding of why the market does what it does and how you can make predictions about what it might do next based on what it is currently doing right now. And so no matter what you use to trade, you're whether you know it or not, you're trading the auction process. And that's the important thing. But we'd love to have you. There is a link in the description to join the Pirate Traders Brigade. It's $20 a month. And as I hope you witnessed today, at some point in a month, I will give you insights that can help you make more than 2 ticks. of profit on the ES. And that's all you need to pay for the membership. So the membership absolutely pays for itself. Thank you, Muhammad. Appreciate you. Pete the Cat says, when the tick chart level goes to the extremes, positive 1,000 or negative 1,000 that you have on your chart, is there a very high probability that the market reversal, like trade for a scalp? So kind of, but not trade for a scalp. So if it is above positive 1,000, that is an overbought market. If it is below negative 1,000, that is an oversold market. But I wouldn't use it for scalps. It is more of an indication that the market needs a dip or a rip. You know what I mean? If the market is just pushing lower and lower and lower and lower and lower, and the ticks get below negative 1,000, it does need to cool off. But as we discussed, it can do it with time. It can push lower and lower and lower and then just go sideways with time. And the longer it goes sideways, the ticks will start to turn around and come back up, because some of those sellers will give up and start taking profits down there. So it's not necessarily just because it's overbought or oversold, you should take a reversal trade, because it could just go sideways. And so you just want to be aware that both of those things could happen and take that into account. Also, this is a kind of a particular thing that happens sometimes when you have a gap. So the overnight is opening outside of the previous day's range. Sometimes the ticks are overbought or oversold, like right at the market open. And so a lot of times that means you need to give those overnight traders a chance to give up on their trades, and wait for it to come back to the zero line before you can trust the information, which is textbook what happened today. We went up and down until the ticks got back to the zero. Then we got the bounce that created that big move up. That was a bounce at the zero line on the ticks at that exact moment, right at the same period low. And you can go back and replay it and you'll see it happen. So that shows us the going sideways around the opening price this morning for the first, 15 minutes, 20 minutes. That was just giving those ticks a chance to cool off. DNK says, my brain will tell me I was wrong, but I still don't close my position and take a bigger loss than I should. Streets also says, I do that too. Yeah, we all do. It's frustrating. That's what's hard about trading, is that sometimes your instincts tell you something and you ignore them, and then you get, a bigger loss because of it. Sometimes your instincts tell you something and you do it, and then you miss out on gains because you did it. And, there's really no remedy for that. I feel like there are some things in trading that just are what they are. You know what I mean? And you got to live with it. Like a race car driver has no choice. At some point, they got to pull into the pit stop and get new gas and new tires. It's just part of being a race car driver. I'm sure they would prefer to just stay on the racetrack and keep racing all day, but it's just part of the job. I think part of the job as a trader is that constant push-pull in your mind between what you think might happen next and how you are positioned for a trade. And there's going to be conflict, and it sucks, but that's the business. We just have to deal with that. The only real antidote that I could give are set it and forget it trades, where it's like you get in the trade, you put your stop, you put your take profit, and then you don't care what your brain says from that moment on. You just let the trade play out. But not everybody can do that type of trading because they get anxious. Frito says, so many large orders getting pulled this week. I agree. Since, 3 days ago, we've had huge sets of stops on both sides of the market all over the place. It's a sign of emotion. I found out the other day, I'm not sure that this stat is real. Somebody can look this up, but there is more funds in America, money management funds, than there are McDonald's right now. So there's literally hundreds of thousands of people in America managing millions and millions of dollars. And when you're at all-time highs and suddenly bad news is coming out, they get emotional and they start changing their mind and they got to do this and they got to do that. And they're human. They're still human. John H. says, this is a run and chop price action flow. My instincts tell me it sucks, and it does. Yeah, it's all a matter of opinion. The market had a very large initial bounce. So we know probably a lot of today's move is already priced in. But if you've been waiting for a dip all day, you're not frustrated. You're chilling like a villain, waiting for that dip. Because probably, certainly as long as we're above the overnight high, we're going to break the B period high at some point today. So let them slowly melt down. That's okay. All right. Speaking of which, this is the first potential level for a bounce right here at the base of the B period single prints. I don't know if we'll get support here or not. We do still have that magnet that is that low volume node at 44, but now we can watch the ticks from here. So from negative 345, and we can say, do they turn around and start to head back up? In which case this is support and we're heading higher, or they can't, in which case we need to dip down to 44. Let's see what happens. Mackie Mac says, Charles, I was a member long ago in 2021. One of the many things I can say is you helped me to avoid losing money still to this day, and I hope you are enjoying married life. Where did you finally land? I am enjoying married life, very much so. It's not without its challenges, obviously, but it's a way better way to live than to be a bachelor. As far as where I ended up, I'm in Cape Cod, Massachusetts. I parked my car in the yard. Jerry says that the advancers versus decliners are weakening. I concur. So it's still above zero, but the momentum is clearly over. Same thing with the breadth. The breadth doesn't move quite as quickly as the ADD does, but the breadth you can see is starting to roll over. So the momentum is not over, guys. The momentum to the upside is not over, but it is certainly running out. And so now we need those strong hand buyers, that second wave of buyers to come in if we're going to get that next move to the upside. And that's why we're watching the ticks. Bogdan says, I officially joined. I'm a pirate. Arr, welcome aboard, me hearty. As always, I like to remind new pirates to ask lots of questions. Um, 104 Ether says, if we dip to 44, are we one time framing down? And if we short, should we target the B period low first? Okay. This is a tricky thing to explain. If you're going to short, the target should be 44. The target should be that low volume node. But I don't think you should short. This is what I'm trying to emphasize this morning. It's easier to trade with momentum than fight it. That's not human instinct. Human instinct is to want to fight momentum. Like your brain is telling you if there's a chance we're coming down here and we're up here, I should be short, right? That's what your brain is telling you to do. But if you do that every day for the next 6 months, you probably won't have very good results. Sometimes you will. Sometimes you'll short and you'll make money and you'll feel like really smart. But over the next 6 months, it won't work out for you most of the time. Whereas if you instead just did nothing and then bought the dip once it dipped down so that you're trading with momentum. Right now, the momentum is up. As long as we're above the overnight high, the momentum is up. So right now, if you were to choose to go long rather than short, you can make the same money. If it finds support and it turns around and comes back up, you're going to get the same, 7-point move that you would make shorting right now. 7 points is 7 points, whether you're going long or short. It's just if you wait for the dip and get long, then your probability of success goes up, which means if you did that every day over and over for the next 6 months, you would have a much higher win rate. And it's hard because it's just not what the human brain is programmed to do. The human brain thinks if the market's going down 7 points, I should be short for a 7-point move. But no, that's not the case. Okay. So that's the idea of momentum and fighting momentum. Then you asked a question about one time framing. So my personal definition of one time framing only begins once we break out of the initial balance. Okay. So meaning we would have to get above the B period high, then we're one time framing up, or below the A period low, then we're one time framing down. But today, we're not really that interested in that as a conceptual idea. Why? Well, let's make it even more complicated. Let's say on days where the market has a large initial balance, most of the move is probably priced in. So even if you start one time framing up or down, you're probably not going to go that far. Okay. Now, yesterday was an exception to that. Yesterday, we had a large initial balance and we made a large move. But yesterday was a one-off event. That's a V-shaped reversal. It's its own thing. It's separate from everything else. Most of the time, let's say 80% of the time, if you have a large initial balance, whenever you start one time framing, you really won't go that far. Maybe 25% of the range of the initial balance, or maybe 30% of the range of the initial balance, but you're probably not going to go that far. So taking all of that I just said to you and saying, how should I trade the market right now? First off, don't wait around for one time framing to get into a trade, right? You don't want to wait around. Second off, don't fight the momentum. Don't short unless we get back inside the overnight range. Then you can short for a gap fill, or you could short to return to the opening price. That's okay, because at that point, you're not fighting momentum anymore. But right now, you are just trying to find a dip to buy. Maybe you're buying the base of the single prints. Maybe you're buying 44. Maybe you're just watching and waiting until you feel confident that we have support, and then you're buying. All of those are acceptable options. The point is just don't sell until the momentum is over. And also try to get in a trade as quickly as you can. You don't want to wait around. The longer you wait when the market has momentum, the less likely your trade is going to work. If you got long earlier this morning down here, your trade worked very, very quickly. If you got long in here, your trade worked very, very quickly, right? If you got long in here, you were okay. But if you started getting long up here or up here, then you probably got screwed. You probably got long and then it immediately pulled down on you. Okay? So when you're talking about a momentum trade, you want to get in it as soon as possible. You don't want to wait around. Cough, cough. You don't want to wait around. Cough, cough. When there's momentum, when you're finding support. Jerry says, is the breadth indicator on Thinkorswim? Yes, it is. This whole screen here is Thinkorswim. This like gray screen. So I got the breadth, which is the VOLD. I got the advancers versus decliners, which in my case, I'm using specifically for the stocks in the S&P 500. That's ADSPD. Got the ticks. That's the tick chart. And then I've got the VIX. I don't really use this for executing trades, but I kind of just like to see it, to trust momentum. Generally, if we have momentum down intraday, you'll have a VIX going up and vice versa. It's kind of, the opposite direction. And then on the SPX and the NDX over here, I have 15-minute candles and a 20 simple moving average. And this is just something I've been watching for years and years. It just tends to be a good indicator of a change in the market. So if we were to come down here today and we were to bounce off of it, well, then probably, we're going to go sideways the rest of the day from there. If we were to cross through it, then we probably need a bit of a pullback. So it's just kind of a good indicator of when larger momentum shifts are happening. If the 20 is holding a support, you've still got momentum up. If it breaks, you're probably going to get a liquidation. If it breaks and then becomes resistance, you're probably going to get new selling. So here's an example of that from yesterday, both indexes at the same time. You poked through it. So, okay, you're probably going to get a little move up. You got it over the next 15 minutes. Then you came back down, turned it into support, and you got continuation higher. Okay? Same thing on the NQ. Poked through twice. Then it turned into support. Then you got your move. I teach all of this in my Mastery of Markets and Minds workshop, but I'm not doing another one until next year. So you got to join the brigade and ask lots of questions if you want to learn between now and then. Okay. So now that we've printed the D period, the market is doing us a huge favor. It's saying to us, we have momentum up. Where can we guess that momentum is probably over? Probably if we break that C period low. Now, we're not technically one time framing. I told you, to technically be one time framing, we'd have to start with a break of the initial balance. But there's two ways the market can balance off the excess it created this morning. One is with price. One is with time. As long as the D period low is above the C period low, we're doing it with time, which means we're not coming back down. So I would say if you wanted to get long the market now, you could use that D period low as a place to stop out. If you do get stopped out, you would then be watching for support at 44 or 41. I always make sure to say thank you, market, when it gives me a chance to get into a trade where I don't have to take on a lot of risk and I have a much larger potential reward. I appreciate when the market gives me asymmetric opportunities. Maybe they work, maybe they don't. That's not the thing. The thing is the opportunity. Speaking of which, right here, right now. Either the buyers bounce literally right now, or we head back to 44. All right, no bounce. So I am now neutral. Neutral on the market. So to go long at the overnight high now, I need to witness support there. Otherwise, my assumption is we're going to spend some time going sideways. It's about to get choppy. And it seems that John H. was right. Zero to Infinity says, can you explain where the base of the single prints came from? Yes. So we had the B period. We then printed the C. Okay. At the time that we printed the C period, the market was up here. And at that moment, the B period was single prints, meaning there was only one letter. Okay. So that's why it's single. Right, only one letter. Now, it's not single prints if it's at the high or the low of the day. That's a buying tail and a selling tail. It's a different thing. But if it's inside the range and it's only one letter, that's a single print. Okay? So the first of those letters is the base of the single prints. So what happens? Well, that first off, that becomes a magnet for price to come back to it. And second off, it often acts as support, which it was in the C period. Look where it bounced. It bounced exactly on that A period high. It bounced exactly on the base of the single prints. Now, if the buyers had stepped in there and kept the momentum going, we'd be going to the moon right now. But they didn't. It didn't hold, so the momentum is over. Now we're back to neutral. Now we got to wait for the dip to 44 and see what happens there to figure out what comes next. Also, earlier, somebody asked me about shorting the market, and I was like, no, you don't short the market here. If you wanted to, you could now short the market because the momentum is over. We filled those single prints, but we didn't get the bounce on the ticks. We didn't reverse it and start going higher. So we're neutral. So now you can go long or short if you'd like. It's up to you. Any final questions for the pirate before we say goodbye? Any questions? As I said earlier, I post that link. I can probably go ahead and post it one more time. So again, I will be doing a call with Brent from Spot Gamma next week. If there's any questions that you want me to ask him, if there's anything you want to learn and you know, through the lens that I use it, click that link. It'll take you to the survey. It's totally anonymous. You don't have to give your email address or anything. I'm not collecting any data or anything like that. I just want your opinions. So just go ahead and type out any questions you want me to ask Brent right here. Okay. And I'll be sure to do that. As far as Spot Gamma is concerned, right now we still have that large liquidity node up there around, 6730 on the SPX. Okay. So as of this moment right now, I do think we are going to poke up there later on in the day. The fact that we're getting the balance at this moment means it's not going to happen right now. It's probably going to happen like 2 o'clock, 3 o'clock this afternoon. Okay. I think for now we're set up to go sideways for a while. I think we're going to be chopping in here for a little bit. Okay. Do not lose track of 44. Do not lose track of that low volume node, because that is a magnet right now for price. With that, I will say goodbye. I will say farewell to you and you and you. Jerry says, is your prior interview with Brent in the archive? You'd have to go to YouTube and Google it. You'd have to go to YouTube and Google it. You'd have to YouTube it. Oh, did you guys just see that Bronco ad? Oh, it went away. Anyway. Yeah, just go to the YouTube channel, Pirate Traders. Click on videos, and it's that first one right there. The one that says Gamma Secrets. Ooh. What's so secret? Well, you're going to have to watch to find out. So yeah, click on that. I will suggest, if anybody who's in the community hasn't watched this yet, you should give it a watch. Okay. You can just play it in the background while you're doing your thing and just kind of listen to it, but you should definitely give that a watch, because next week in the conversation I'm having, I'm not going to go over any of the basics that are discussed in here. This is more about what market makers do and how they function and why the gamma levels act the way they act. This next conversation, we're going to dial in much more into specifics of how to execute trades based on this data, and some new tools and stuff that they're creating, that they're going to be launching soon. So you will have to have watched the first one to make sense of the second one. All right. Thank you guys very much. Have a great rest of your day. Looking for support around the overnight high, 67.40. If we get it, looking for the market to get back up above the current high, 67.67. And I don't think it's going to be fast. I think it's going to take hours for the market to slowly creep its way back up there. So do with that what you will.